With earnings season in full swing and the U.S. election just under a week away, we're taking a look at how retail investors are managing their portfolios in the market. Joining us now, we want to bring in James Kostulias. He is Managing Director and Head of Trading Services at Charles Schwab. It's great to have you here. So, James, let's talk about some of the positioning right now and focus first on earnings. We're in the middle of Mag 7 earnings right now. I'm curious what the risk appetite has looked like from retail traders when it comes to the AI trade.
Yeah, thanks so much for having me. I think I'd say two things. We look at trader sentiment via surveys, and we look at actually trading activity being the Schwab Trading Activity Index. And certainly recently, we've seen traders take risk off and take some profits home as well, with sort of selling in tech net in September and the early parts of October. And I think as a lot of your commentary recently around sort of the election, we're seeing clients who view it sort of more as a risk than an opportunity and getting a little bit more conservative here versus aggressive heading into the election.
And James, real quick, before we get into some of maybe those election plays, when it comes to the Mag 7 concerns, is most of it, and it's hard to tell exactly what retail traders are driving some of those decisions, but do you think it's more valuation based, or is it maybe just a bit of a more rotation trade that they're seeing opportunity elsewhere?
Yeah, probably a little bit of both. I do think the valuations are perceived to be high. I think we've saw some rotation into fixed income in September as well. I also think what our survey showed is a lot of a big delta in terms of where our traders are relative to rates. Usually you'll see maybe a little bit of sort of back and forth on, will it be a quarter, will it be zero, would it be 25, would it be 50? Our most recent survey would tell us that, traders are sort of split from 0 to all the way up to 100 basis points over the course of the rest of the year. And so I think that's sort of all playing into the perspective on a little bit of rotation out of technology, and obviously that would be the Mag 7.
And James, when it comes to the election, what are some of the risk management strategies that you're seeing traders employ? Maybe what that signals about what's ahead?
Yeah, again, I think the rotation into fixed income, certainly the rotation away from technology. We do see clients who are telling us they're interested in moving money back into the market, but typically we see a pretty high correlation in our trading activity index vis-a the S&P 500 moves and our clients net buying and selling. I think in September and into October here, we're actually seeing a divergence there, which tells us that clients are, again, more interested in taking risk off than putting risk on right now heading into the election. I know you just had Matt on, you were chatting a little bit about Bitcoin. It's interesting as well, sort of the client perceptions in that survey of where they think Bitcoin is going to go are also pretty equally split, as sort of 25-ish% bullish, 25-ish% bearish, and sort of 50% saying, I really don't know. So I think there's a lot of uncertainty right now, and what we're seeing from our traders is not sort of being off to the sidelines, but certainly not trying to leg into putting on more risk heading into the election here.
James, is there an outlier this time or this year compared to past elections, just in terms of some of that trading activity or risk on versus risk off preference?
I think maybe the outlier that I would say would be sort of the true uncertainty, both probably around the actual outcome and the implications of whichever way the outcome were to ultimately go. And so typically, I think you'll see people with sort of stronger positions heading into previous elections. And right now, the client's a bit more wait and see than I've seen, honestly.
The other big driver for the market that we haven't mentioned, the third big driver, will be potentially more rate cuts here from the Fed. Of course, we have the FOMC meeting following the election next week. What are traders on your platform currently pricing in?
I'm sorry, what was it? What are traders currently what?
Pricing in for a rate cut, just the odds that we will get a rate cut next week.
Yeah, and I think it's kind of split, quite frankly, which is really pretty interesting. And so I think some of the things we're seeing our clients rotate into are a bit more defensive. So most bullish right now, energy and utilities. Tech is always sort of a bullish one for us, especially with where we are with AI, although that did also sort of come down in September. So I think the plays right now are honestly sort of kind of split right now.
All right, James Kostulias, great to have you here of Charles Schwab. Thanks so much for taking the time to join us.
Thank you.